Hello everyone and welcome to my new channel. Let's get into it. Today we're going to talk about a new indicator, but before we get there, we need to talk about John Carter first. He had this concept of stacked EMAs in his interview with Richard Moglen, and EMAs have been around, well, forever, basically since stock charts. And you can get very simple with just a couple EMAs. This is 8, 21, and 55. You can do something a little bit more complicated and put 6 EMAs on your chart. These are just fib numbers. Do something even a little bit more fancy. These are guppy EMAs with some signals on there. I find it a little hard to look at though. A Madrid EMA ribbon is another popular EMA indicator. This I also find kind of hard to look at. So I wanted to create something a little bit different based on what John Carter was talking about. And so it's called the Colored Stacked EMA Ribbon, or Stacked EMAs for short. When you look at it on TradingView, it's going to be called Colored Stacked EMA Ribbon. And again, this is based off of what John Carter was talking about in his interview. So here it is. Let me walk you through some of the settings first. You can input any EMA you want, and I should say EMA stands for exponential moving average. It's just a smoothing function of price. So right here I have 8, 13, 21, 34, 55, and 89. You could make it 8, 9, 10, 11, 12 as long as they're in consecutive rising order. You can make it 10, 20, 30, 40, 50, 60, whatever you like. Doesn't matter as long as they're consecutive and rising. The look back here, this has to do with the colors that the EMA lines themselves get. Now you can adjust the time frame too. So say I was on a 3-minute chart, I can adjust that time frame to daily, and it'll plot the lines, but it will not plot the fill color because of the mismatch in the time frames. So there's the fill color, and it's going to be green when all the EMAs are stacked. You can also adjust the bar color. We'll talk about that a little bit more once we look at the charts. You can turn the bar colors off. You can change the colors, whatever you like. And here we're back to the colors the EMA lines themselves get. And that is dependent on the look back. So if the look back is set at 1, which is a pretty short look back, but that's what I usually use. And the EMA is determined to be rising, that EMA will be green. Conversely, if it's falling, that EMA will be red. And then if it's neither rising or falling, so flat-ish, it'll be gray. So I have all 6 EMAs set up the same way in terms of color, but you can adjust that. You know, pink for rising, purple for falling, some other color for flat, whatever you like. So there's all 6 of them all set up the same way. To me, it's kind of intuitive. But I did make the 13 EMA and the 21 EMA thicker. All right, the triangle signals. We'll talk about that in just a minute, but you can turn them on and off. You can turn the background color on and off. You can change the colors, whatever you like. So the stacked and the colors refers to all of the EMAs being in a bullish alignment. So some other EMA systems, they're looking at the close relative to the EMA. In this system, you're looking at the EMAs relative to each other. And the term stacked means that they're all stacked in a bullish alignment. So the 13 is above the 21, which is above the 34, on and on and on. And whatever you set your EMAs to, it could be 10, 20, 30, 40, they're all leveled on top of each other in a stack, like a stack of cards or something. And the shortest EMA is at the top of the stack, and the longest EMA is at the bottom of the stack, and everything in between respects the other EMAs. And that just means there's a bullish trend in force on whatever time frame you're looking at. You can keep these EMA line values on the price scale or not. Usually I just turn it off to keep the chart a little bit cleaner. So a system like this works great on its own, but it works a little bit better when you add some trend lines. Maybe you focus on higher highs and higher lows. And I also like a volume indicator. We'll talk about volume indicators a little bit later. It works for bearish trends. So in a truly bearish trend, when all the EMAs are stacked bearishly, the cloud will turn red. It works for bullish trends. And then, of course, you have a neutral trend where the trend is neither bullish nor bearish. So we call that neutral. And the fill color goes away and the candle color turns to gray. So when the candles are in a strong bullish trend and moving up and all the EMAs are in alignment, those are bright green candles. When the EMA lines start to turn red, they get a dark green color, like a dark shadow, and that transitions into gray. Again, you can change all these candle colors. The fill color will go to the middle of the first or last candle where the fill condition is true. So it looks like it's overlapping, and it is. It's overlapping to half the distance of the candle body width. And that's just the way TradingView fill colors work. So anyway, if you combine volume with trend lines and this indicator, you get a lot of information out of just a few simple tools. And that's why I really like it. I use it on the daily frame for swing trades. I use it on a 3-minute chart for day trades. And it works fairly well on other time frames in between. It's really personal preference. You do need to, use all the same good money management skills that you used before, putting in stops, position sizing, portfolio management, taking profits when you have them, all that kind of stuff. But a lot of times you get these little green triangles which denote that the EMAs have turned back to all green, and they precede bigger moves. Now in a neutral trend, what I've noticed is that the green triangles, which denote going back from red EMAs to green EMAs in this case, aren't as reliable. And sometimes it takes 2 or 3 of those green triangles to finally push you back into an uptrend. I mean, that first move was a fake out, failed, but that's most likely because it's in a neutral zone. The second one in this case worked, but sometimes it takes 2, 3, 4, or more of these little triangles showing up before you finally push out. Now this move failed eventually too, but that's 7,500 points later. That's not bad. But in a green cloud, these triangles on whatever time frame you're on, and again, it just means that all the EMAs are green. They're all rising. The EMAs are stacked because the cloud fill is green. Your odds of success go up. Your probabilities are in your favor. You can think of it like a tide lifting all boats. And it's just more likely that some of the trades you put on are going to work in this environment. What I really like is that sometimes you'll get the EMAs all turning back to green before you really break out. So you can see back here, it took 2 signals to go, but the first one didn't really fail too badly. It kind of depends on where you have your stop there, if you would get knocked out or not. The second one showed up before the breakout, and that was a nice little move there. In general, if you can, you want to be early in these trends, and this green-filled cloud will help you get in earlier. Now this one kind of broke the trend line at the same time you got the green triangle, but this ended up being a really nice move. And then you had a bunch of other kind of smaller moves, maybe add-on type things, where you made the bulk of the money already, and then you're kind of just hoping for a little bit more before the trend resets or corrects. All these indexes and ETFs, they tend to be mean reverting at a certain level. They tend to go back and test the 13 EMA, the 21 EMA before they end up in a neutral cloud for a little bit, kind of reset, and then start moving again. So enough on Bitcoin. Let's look at something that's continuously in a bearish cloud for the last, I don't know, couple weeks anyway, months, and that's AMD. And all the signals work the same way, whether you're in a bullish cloud or a bearish cloud. We're coming back and testing the 13 EMA and the 21 EMA for AMD and failing consistently. And you see the red triangles show up on the failures. Now keep in mind, on a daily chart, these triangles won't show up until the candle or the bar is closed. But I've set it to flash. So sometimes intraday it'll flash with a triangle before it realizes that the bar isn't really closed yet and the triangle goes away. It'll flash for a second or two. And that's just kind of like a hat tip to say, okay, when the candle closes, you should check what it looks like at the close to see if that triangle is still in force. And if it is, that's a signal for it to go lower. I mentioned the 3-minute chart. Here's a closer look. This happens to be Bitcoin. There's a volume indicator here. We'll talk about the volume indicator another time. That's a whole nother video. But the trend is down. See, the slope is down. But there's a green triangle there where all the EMA lines turn back to green, signifying that they're all rising over one look-back period. But this volume indicator is red. I can see that the last cloud was red. I can see that the trend overall is down. And so I'm not looking for longs here. You know, and the same kind of logic applies to daily charts. You know, once that cloud is green, I'm biasing my trades to the bullish side. And then when it goes neutral, I'm still going to bias my ideas long, except I have to accept that my trades won't work as well as a neutral zone because it is neither bullish nor bearish. But my expectation is that the next cloud that forms is likely going to be a bullish cloud again, right? So it's the same principle on a shorter term time frame like the 3-minute. I have a bearish cloud, and that literally means that the trend is lower. And until it flips to bullish, signified by a green cloud, I'm assuming that these small pops in the neutral zone are going to fail. And I have a secondary indicator on there, which is volume. And that helps me stay on the right side of the trade too. Even if I took that long, I'd probably quickly get stopped out. Let's look at something else. This is the Qs. Lately it's been testing the 55 EMA. Right in there. That's my 5th EMA. The 6th one's the 89. You know, maybe if this neutral zone continues for a while, there'll be more chop. Maybe it ends up testing the 89 EMA. You don't really know, but you expect the neutral zone to just be more choppy. Less of the signals are going to work. Less trades are going to work in general. But maybe if you're an investor, you want to be looking at some of these dips. You know, it depends very much on your time frame. So back here, we faded pretty hard, but came back. Greenish cloud came back in force. And, you know, this is the kind of thing that I'd be looking to buy. When you're in the neutral zone, I don't know if there's some news this day or some NVIDIA report. I don't know. I don't remember. But you want to be thinking about getting in at the start of trends and not buying up in this zone here that I'm running my cursor over, where you're extended from the EMAs. You've already made a big run. You know that ETFs and indexes tend to be mean reverting. They tend to check back to the 8, the 13, the 21 EMA. You know, whatever time frame that you use and whatever EMAs that you like, you can put those in and You know, you can wait for those tests. You can see what happens after the test. You can wait for the EMA lines all to turn back green before you jump in. I have to go back pretty far in the Qs to find a bearish cloud. So this is back here in late 2022, early 2023. And if I switch to a weekly, that was COVID, that big dip there, that's the COVID low. And then in 22, we slid pretty far. Fed was hiking rates, trying to tamp down inflation, da-da-da-da-da. But eventually we get our green clouds back. And all of these dips on a weekly time frame, you know, they kind of look like noise over the past 2 years. And it's been up and to the right ever since. So on the daily, you'll see these neutral zones, these cloud breaks. But as the higher time frames like weekly and monthly stay green and up and to the right, that's a good backdrop to have. So time frame is key. All right, so we've gone back, we found a bearish cloud, and I probably wouldn't take this on the daily because we're coming off of a bearish cloud and we have a couple green triangle signals. But you should know that on a lower time frame, like 60 minute, at some point there's going to be a green cloud in here, and you know, it just depends on your time frame and what you like to trade off of or invest off of. You know, so for me on a daily chart, I would miss that initial pop. Once the cloud turns back green, we get into a neutral zone. Now, to me, all of these signals are more interesting. You know, you're still running into resistance from the EMAs being inverted. You're still in kind of a choppy neutral zone, so the signals aren't working perfectly. But it's much more interesting now that you've established that the stock or ETF or the Qs in this case is going up and to the right. So once that green cloud is in force, the signals tend to work better because everybody is seeing the same thing, regardless of what indicators they use, regardless of the platform. The stock market's hot, it's a bull market, people are looking to buy the dip, and everybody's happy until the trend comes to an end. So let's wrap this up. The indicator is called Colored Stacked EMA Ribbon, and it's free on TradingView. I think you need a premium subscription to look at invite-only scripts, but anyone that requests access will get it for free. I'm not charging anything for it. Just mention my YouTube channel name and you're in. Also, if you find these indicators helpful and you want more like this, please like the video. It just helps with the YouTube algo and the metrics. Really appreciate that. And that's it. All right, until the next indicator comes out, thanks for watching, and I'll see you on the next one.